Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Form 8K filing from Moatable Inc. It's a bit like finding out your favorite bakery has been using the wrong recipe all along. Prepare for a bit of a financial oopsie. Moatable Inc. just dropped a bomb. They're saying their past financial reports can't be trusted. This includes their full financial picture for 2023 and all the quarterly updates from early 2023 through late 2023. Through reason, they messed up their accounting for sales tax. Basically, they didn't report enough sales tax they owed. To be specific, on March 31, 2025, the top people at Moatable, including the CEO, CFO, and the board of directors, figured out that their financial reports from the past, from their yearly financial report for 2023 and the quarterly reports for the first 3 quarters of 2023 and the quarterly reports for the first 3 quarters of 2023 and the first 3 quarters of 2023 and the first 3 quarters of 2023 and the quarterly reports for the first 3 quarters of 2024 can't be relied upon anymore and have to be fixed because of errors, mistakes when accounting for sales tax. Think of it like this. Imagine you're running a lemonade stand and you forget to factor in the cost of the lemons when calculating your profits. That's what Moatable did, but on a much, much larger scale. These accounting mistakes led to an understatement of sales tax liability, which is another way of saying they didn't report enough sales tax that they owed during those time periods. So investors shouldn't trust the money numbers for these periods. And any information released that talks about those money numbers for these periods and any information released that talks about those money numbers. The errors resulted in about $3.6 million in underestimated sales tax, including interest and penalties. Of that amount, to 2023 and another $9 million from the first 3 quarters of 2024. That's a big chunk of change. Because of these errors, the company has found what they call a material weakness in how they handle their financial reporting. Basically, their system for keeping track of their money and reporting it to the SEC wasn't working properly. They're now working on a plan to fix it. So what's next? Moatable is working on refiling their annual report for 2024, which will include fixed or restated financial statements for 2023. It will also include all the corrected information for the first 3 quarters of 2023 and 2024. The deadline to file this report is no later than 15 calendar days following the prescribed filing date. As for the quarterly reports, the company will fix them in connection with their future filings of the quarterly reports in 2025. The company's top executives and board of directors have discussed these issues with their independent accounting firm Markham-Asia CPS LLP. Now, for word of caution, the company is including a cautionary statement regarding forward-looking statements. This means that they're warning everyone that what they expect to happen in the future might not actually happen. There are risks involved and actual results could be very different from what they're saying. Some of the things that could cause problems include delays in fixing the financial reports, the possibility of finding more accounting issues, and any bad effects on the company's business because of this announcement. The company is telling you not to rely too much on their forward-looking statements. There are a lot of important things that could change what actually happens. You can find more information about these risks in their annual reports. The company does not have any obligation to update or change anything because of new information, future events, or changes. Finally, the company is including a cover page interactive data file in the filing at KEG. Now, what does all this mean for Moatable Inc.? Well, it's not great. Restating financials shakes investor confidence. However, the company is addressing the issue head-on, which is a good sign. The fact that they caught the error themselves before regulators did is also positive, though not preferable to if they caught them from the start. It shows weakness in their internal controls, which need serious improvement. It might also make investors question the quality of Moatable's financial management. However, the restatement is contained and doesn't bring into question the business's ability to operate, so it is only a dent in what might be a long road. For investors, the key is to wait and see how quickly and effectively Moatable fixes these issues. Until the restated financials are released and the internal controls are demonstrably improved, proceed with caution. Thanks for watching Corporate Decoder. If you found this breakdown helpful, be sure to like, comment, and subscribe for more insights into the world of corporate filings.